In this video, I'm going to talk about how I learned to trade and the steps that you can take to become a professional trader like me. My trading career actually started very differently from everyone else. When most kids were seniors in high school, I graduated from New York University's Stern School of Business at the age of 18. But I actually learned to trade when I was 16. This was in the late 90s during the go-go days of day trading. At the time, there was no online charting platforms. So I learned to read price, and I learned about support and resistance by charting prices of stocks on pen and paper. I charted every single time it would touch a certain price. Imagine having to chart every tick these days. But what this really taught me is how to understand price and the importance of support and resistance. Then I got a job at JPMorgan Chase trading Forex for a Wall Street bank, where I learned to trade on fundamentals, how to manage risk, and how to understand sentiment. And I cover a lot of this on my YouTube channel, so make sure you subscribe for updates. Eventually, I produced trade ideas for clients and myself, and I traded for them as well. There's a lot that I learned along the way, so here's what I want to share with you if I was starting over. The first thing I would recommend is don't bother with any charting package except for TradingView. They're the best, and the free version is good enough for most people. The paid version allows you to put multiple charts and indicators on your screen, which really is valuable, but you don't need them right away. Connect your broker trading account so you can trade from the chart, which makes it very easy, and a lot of people like doing that. Make sure your broker is regulated by some major regulatory agencies because you don't want to end up with some firm that goes belly up, and you want to make sure that regulatory agencies keep them in check. Then, if you want to get a bit more fancy, you can use some sophisticated trading tools through the MetaTrader platform that you can download, and we've got some tools to help you manage trades better. After that, follow a few smart people on Twitter, x.com, and news sources like me at Lien FX. I also like at Forex Live, Mark to Market, ING Economics, Investing.com, News Squawk. I put the links to those below. Then, here's my tips. Number 1, keep it simple and trade with the trend. Many traders come to this market looking for opportunities to pick tops or bottoms. I'll admit that in the first few years of trading, I was guilty of that as well. But if I had to start over, I would keep it simple and trade with the trend. Sure, plenty of people have made money picking tops or bottoms, but it is hard to identify the top or bottom because usually it is falling or rising for a very good reason. Tops and bottoms are only obvious in hindsight. If you prefer less stress, better results, trade with the trend. When the trend or momentum is on your side, the profits tend to be smoother, quicker, and more generous. Shallower retracements give you less opportunity to second-guess your trades. Quicker moves give you the opportunity to lock in profits, and more generous continuations allow you to milk those trades for bigger gains. Doesn't that sound so much better than loss after loss after loss until you pick the actual top or bottom? Sure, you'll feel smarter than everyone else if you time the perfect turn, but you and I both know that's a dime a dozen compared to steady, consistent, frequent wins that you can get if you keep it simple and trade with the trend. Number 2, master one consistent strategy. Let me ask you a question. How many indicators do you have in your charts? Comment below and let me know how many you have. There are a million of different ways to trade, a million different combination of indicators. You could use trend lines, moving averages, Bollinger Bands, RSIs. The list goes on and on. You could trade on daily charts, 4-hour charts, 15-minute charts, 5-minute, anything you want. And it won't be long before you get that sinking feeling of analysis paralysis. You put too many indicators onto the charts, you convince yourself of anything, and you've looked at too many time frames that you feel confused and overwhelmed to the point where you're unable to make a decision. And if you do, you end up questioning whether it's the right one. You can overcome analysis paralysis by focusing on no more than 3 indicators and 1 trading strategy. It just takes 1. Master one consistent strategy. Now, finding a great strategy is the hard part. It took me nearly 10 years before I settled on Zip. I spent years understanding the strategy inside and out, and that's what you need to do. You need to understand when it works, when it doesn't. The best times to trade, the worst times to trade. The best instruments to trade, the worst instruments to trade. And, doing so lets you really understand your strategy inside and out. I also created a version that's easy to interpret that helps me avoid impulsive trading. And in doing so, Zip has become my most consistent and profitable strategy. All I do is I wait for the white candle to form within a green background to buy, and a white candle to form with a red background to sell. I coded all of this with the long and short-term trends onto the charts to produce one clear, easy-to-read signal that keeps me zeroed in on when to buy and sell and when not to trade. Number 3, Don't ignore fundamentals and market sentiment. I don't care what anyone else says, but not everything is priced into the chart. News, growth, interest rate direction, they all matter. I promise you that you don't need a PhD in economics to be a good trader. But if you want to go from trading disaster to trading master, you can't ignore fundamentals and market sentiment. At minimum, promise me there are 2 things you will know every single day. Is there economic data or events coming up that could sabotage your trade? And is market sentiment on your side? Understanding fundamentals and market sentiment helps to prevent losses and make sure that you're on the right side of the market. You can follow me, Lien FX, on Twitter for daily video updates on where the market sentiment is. You can follow Forex Live for real-time updates, my buddy Mark Chandler at Mark to Market for a comprehensive Forex market overview. And I include the links in the description below. If you do that, you'll know as much as I do. Number 4, set goals and realistic expectations. This seems simple, but setting a clear goal is one of the most important changes that I made to my trading. The only goal that most traders have is to make money, and hopefully make money every day, every single trade. But we know that can never be true. And when there's a losing trade or 2 losing trades, it affects your confidence and focus. Goal setting is a powerful way to create motivation, direction, and clarity. When you set a goal, you're empowering yourself to make it happen. When you hit that goal, rinse and repeat. My goal is 100 pips a week, 300 to 400 pips a month, 3,000 to 4,000 pips a year. It sounds small, but as you can see here in July, it adds up to a big number. And a small weekly target is great because it means that it's achievable. Number 5, the best offense is a good defense. It's a very popular saying in sports. Believe it or not, it is also important to have the same mindset when you're trading. Instead of protecting the goal, what you're protecting here is your capital and your profits, and learning to lock in profits when you have them, trading more conservatively when you reach your goal, and making sure that you don't allow any one trade to blow up your account is the key to consistent profitability. So these are the steps that I would take if I were to start over. If you found them valuable, please take 2 minutes of your time to like this video and subscribe to my channel if you want more tips on trading. If you're interested in my zip indicator, check out the links in the description below, along with the links to the Twitter accounts. See you next time.